All right, this is London. We are back. I wanted to make a few changes in terms of the tech, etc., and looks like we're up and running. I'd say we're up and running. Let's see. I hope so. So let me make sure that we've got it on my end, and then we guys can get kind of rolling. We'll talk about some technicals. We'll talk about just some good things that are going on and what to be a part of, what you guys are doing, what is cooking in 2025 for you. So Market Hedge is on the map. That's going to be the main topic of discussion. I will be happy to talk about it with anybody and preferably with my buddies that it has been a little bit of a while, which is a good thing. It'll be nice to catch up, ladies and gentlemen. So looking at the current trade that we're in, I grabbed some positions here. Wanted to stay away from this hard move to the downside. You guys will probably the feeling. I mean, if you look at this right here, we had one of these typical days with Bitcoin where the candles are telling a different story than the lines, right? This is just what she does when she does it, and she loves to do it, right? So looking at this line level of support here that we had, bam, we see the multiple hits, 1, 2, 3. We see that descending triangle, which we did power up against and go get our target, which was a very nice move. I hope everybody hit that move with me. Let's see. The issue today with a little bit of, I won't say trepidation, but a little bit of, it's trying to make the traders nervous. You guys agree? This power to the downside here. Let's take a look. The overall move was a good move. You guys will agree it was a nice move from the top to the bottom. Let's measure that real quickly and just take a look. This was from the very top to the bottom. Last night from the target hit down, looking at a 3.7% move. Now, where are we? We are exactly, just to fill in the blanks and details, where are we exactly? We're exactly here on this 4-hourly, on the 4-hourly Bollinger Band. So, like a champ, typically, the 4-hourly Bollinger Band is just it is the litmus test. It is the gauge for Bitcoin. So that 4-hourly is what we've been dealing with for guys the last number of hours. So looking at the framework here, what we're trying to, let's see what we would like to accomplish. Let's go ahead and see if we can make this chart bigger. When we're looking at a pickup below, the primary thing that I would be doing, and you guys know this, would be, okay, is asking ourselves, do we have a target above? Right? Then you can measure, okay, directionally the pickup is worth it to the downside. If we can enter, and then at what point, I'd say if we're directionally have a reasonable expectation of going back to the upside, the question will become, what is our level of exposure? Right? So we need to be going in the right direction. Everyone agree? Yes. If we have a reasonable expectation of going in the right direction. So say we'd like, and it may be counterintuitive, but no, we're going up, right? At least that was the story here, right? Hitting this specific top level target. The question becomes, as we're going down, ideally, right? As we're going down, do we have a target to the upside? If so, I want to capture value. And that's what Market Hedge is all about. Taking a look at the orders that have been placed in here. I stayed away from this bottom level. Let's see what time that was. That was this morning at about, 10:45 or so. I wasn't right in front of the computer, to be honest, and also it was just a little bit of a potential for a bigger move than I wanted exposure with, given the potential risk on a hedge, meaning here would be compounding orders in. Okay, so that was just something that I decided to let things settle down a little bit in this zone, and then I decided to go ahead and stack some orders below Market Hedge, right? And in this specific instance, what would we be hedging? To some extent, we'd be hedging, let's say, this preceding level of support here. Right? I always want to say I'm hedging something, and you may say, well, you're always saying hedging. It's because I want a target. I want to know for a fact that I'm headed somewhere with my pickups, right? If I'm heading down and straight down, I don't want to go long, guys. I don't. If I'm heading up and straight up, I don't want to go short. I think we can agree. So if, and to the extent that I've identified, like the last few days here, if I've identified some degree of target to the upside, then bam, I'm ready to hedge, okay? If I've identified some target to the downside, right? If I've identified some sort of a target to the downside, then I'm ready to short and hedge, okay? But until I have a target, I'm not going to be technically hedging, okay? Now, I can show off a few of the details here. We have an active trade here. I can show off a little bit of the platform. I can either do it in stream, which would be fine. That's no sweat off my back. To show you a little bit of how things work, it would be nice to show you guys when the market is live. So to the extent that we could have a little bit of input from Luke, I'll maybe help or let you decide in terms of helping me if it would be beneficial or when would it be beneficial to go ahead and show some of the dynamics while we're waiting on a few more variables or features to be added to MarketHedge before we just start slamming into trading on it. It's something that has been in the works for a couple of months, just a short number of months here. It's simple, let's say its simplistic approach is what makes it really, really nice and effective and fast. So what I'll do, since we had the hiccup on the front end, I think YouTube is probably going to let us just sit here and make sure our technology works for a while, which is okay. That's okay, no problem. Appreciate that opportunity, YouTube. No big deal. Make sure our visuals are right, make sure our audio is right. And let's see what we've got here. So that won't stop me necessarily from demonstrating, but I'd rather have some guys on the line and know who I'm really demonstrating this to, and have it more a part of a discussion in terms of the overall strategy, etc. I don't think I need to needlessly rehearse the feature details of a blockbuster product. I just don't think we need to. It speaks for itself. It's damn good. So that is the truth. In terms of BTCC this weekend, everyone say, okay, well, what are we doing this weekend? What's Bitcoin going to do this weekend? And shout out to BTCC, by the way. That's on my mind. Those guys are doing a great job. And let's see here what we have. This specific, 4 hourly. I tell you, I say it's like the mafia. All right, the 4 hourly, this yellow and blue, the 4 hourly literally is the time frame to hedge. It just is, period. Has it always been like that? I don't know. Take a look back through here. These are just great trades. That yellow and blue line. I'll put the more simplistic Bollinger Band on there. This was something that I created a long time ago in terms of the Bollinger Band multi-time frame. You guys will recall that I guess the other one we created was that I created was the RSI bands. That's a nice one, the RSI bands. So we'll get to those. But just within that 4 hourly. That 4 hourly is something that is definitely going to be the it's going to be the king on the throne this specific weekend. If we had to call it like we see it, it's probably just going to be a tight range, most likely. Though, let's note that we were tight enough here to get. If you're going to look at the degree of the move here was a pretty good move. If we could be in for maybe an early move, let's go through a nuance here, okay? Let's just talk technicals for a moment. This band constricted means we're likely to move, okay? We know that on the 4 hourly bands. Now, you see how tight this was before we got the pop. You'll see that through the history here, really, really tightening in and then bam, drop with a return. Okay, so as we're tightened in here, just note this. If, and to the extent, expect this at some point, if we're continuing to expand, which we're doing right now, why? Because we're off the 20 moving average. That 4 hour simple moving average is the 20. Okay, so the fact that we are off of the 20 means what? That the bands are expanding. Okay, so throughout the weekend, typically, unless we're to make the move now, We got that squeeze, meaning the tightness of these bands. We got that move, right? And what was tightening this? The fact these bands were tightening because we were along that 20 moving average. So the point to be made is, if this weekend you see the price action on the 20 moving average, what will that mean? If it's on the 20 moving average on the 4 hourly, it will mean that the bands are constricting. Okay? The bands will constrict if price is on the 20 moving average. We understand that, right? That means, right, we're going to be, our calculation for the standard deviation here is going to just tighten up. It's going to constrict, but we got to be on that 20 moving average for it to happen. So it's a good axiom. It's a good lesson to just teach yourself in terms of appreciating when we move away from the 4 hourly 20 moving average is when we have spent time on the 20 moving average. Okay, that's something important. We don't constrict like this. You see the constriction here precedingly. What's making this constrict? We are on the 4 hourly 20 moving average. You see these candles, bam, 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 bam. We are on it. Okay, starts to expand when what? When we get away from the 20 moving average. Right on. Okay, so that's what's in play. It was in play here. You saw it. We tightened up. Why? Because we were on the 20. We're on the 20. We're tightening, right? And that tightening is a precursor again to us moving. Okay? It's a big deal. Pay attention to the 4 hourly. I know you guys do, but that is something that is often overlooked. People will say, well, the price action is going to move when the bands are constricted on the Bollinger, when the Bollinger bands are constricted on the 4 hourly or whatnot, right? So, but they fail to, people will say that, but they fail to recognize that the bands constrict when we're on the 20 moving average, which means what? You're not going to move unless you get to the 20 moving average on the 4 hourly. Okay? It's just a fact. You're just typically not going to move unless you spend some time on the 20 moving average on the 4 hourly, right? Which makes it a what? It makes it a good target, right? As we talk about hedging, it makes it a good target. I think we agree, right? So that doesn't go without saying. I think you guys will appreciate it. It just doesn't go without saying. People don't think about Bollinger Bands that way. They don't think about probably half the indicators they use, but we at least have covered that in terms of a hidden gem of the market that requires, right, literally price to spend time on the 4 hourly 20 moving average. Okay, and it's a critical time frame. So I will just say it literally. It's like it's got to check in. It's got to punch its ticket. Bitcoin has to punch her ticket on the 20 moving average on the 4 hourly before she's let out of class to go ahead and make a move. Literally, it's just look at the price action. Look at your Bollinger Band. Look at your 20 moving average. Okay. It couldn't be more clear or technically accurate to say that. It just couldn't, okay? And when are you tightening again? You're tightening when here we go. Boom, 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 boom. So you say, well, it's just a crossover. Okay, it's a good target. Look at this. Bam, 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 bam. You see this? It is a good target. We agree, okay? It is a good target. Until what? Until it's so tight, you spent so much time on the 20 moving average, it gets the hall pass, it's out of school, bam. She's ready to take off, okay? Until then, look at all this action in and around the 20 moving average. Look at all this action here in and around the 20 moving average. Gets aggressive, yeah. But she's got to spend the time on the 20 on the 4 hourly. If she's not spending time on the 20, it's like they're not going to let her move. Guys, it's like she's got to check in with that 4 hourly 20 moving average. So I invite you to please take a look at your technicals. Look at your Bollinger Bands on the 20, on the 4 hour time frame, rather, and just maybe, I don't know, just spend some time really digesting that. Okay, so and as we look at targets for Market Hedge, we'll have different types of targets. Okay, right now you see here specific positions that are laid out. We have orders. Okay, the positions are going to be bright green, 1, 2, 3, 4. Those are the bright green lines, and the Let me go ahead and move this over just a touch. Oh, that's not gonna work with me exactly the way I want it to. Let me move this. That's fine. I'll move the other one just a moment. But the specific green are positions, okay? There's a faint, you see these order numbers here. These are all orders all the way down with a batch number next to them. Yeah, a lot of orders, okay? So we're covered to the downside. When I execute, the important thing for me is to say, okay, if I'm putting in, let's go ahead and recreate this. Let's say I want to recreate 333 and margin. Let's go 333, and I'm just taking this right off here. 333 with leverage of 100. Not real aggressive, and it looks like I got 30. What's our steps? 55. That's $55 between each order. The important thing here is that it's going to tell me what is my total risk. 7,000. So if we were to, on this specific trade, if we were to collapse all the way through here, I know I've got a limited amount of money that can be spent, $7,700. That's my risk on that group of orders, okay? And that's going to assume that I pour all the way down through. Very important. Very important to understand and to be able to directly and immediately discern, configure. You don't have to configure, it's automatic here, but to be able to appreciate and configure him with whatever additional trades you may have going on, and whatever your ultimate exposure is. It's a risk. It is risk, like literally. So especially when you get multiple accounts or multiple positions or multiple batches ongoing, not to overly complicate, this is one batch right here. So we have a batch. Yes. Okay. So we've got 4 positions live. We have 26 additional orders, okay, that are the ones highlighted in this kind of the more subtle green here. All those orders are represented here. So this is where we get the estimated total risk, okay, which is formulaic. It's not going to change. It is set in stone. If I raise my number of orders, I'm raising my specific estimated total risk. You see, with a $25,000 account, with margin 333, leverage of 100, I can get through about 50, almost 55 orders. Okay, so we're at 30. So it is a risky game for people with an appetite for risk. That is trading, period. Particularly, guys, futures and leverage. It is not for the faint of heart. You know that. You have to have an appetite for it. If you have an appetite for it, it's fantastic. And if you're free and clear wherever you're living, your country, etc. Some countries love it. Some countries are a little bit more difficult to deal with on it. And I think Trump coin is trading on leverage wherever it's trading. So we've definitely had a shakeup here in crypto the last number of months, right? So kind of too strange to be true, but yeah, we've had it going on here. So we will see how that continues to reflect in the opportunities and maybe a little bit of leeway that we have here in the U.S. Definitely. You imagine if we had the Biden coin. I mean, we didn't have that. So we just didn't have that. So all to say, when we are looking at, let's cover a few things. Let's just rewind just a few issues here that we had. One was, we want to hedge when? We want to hedge when we have a target, okay? Hedging is going to require an asymmetrical focus or targeting back away from, essentially, so we're looking at what, guys? A pullback or a throwback, right? Technically, a throwback is going to be something up over the top, boom, that throws back. Technically, a pullback is going to be underneath, and it's going to pull back to the upside. So when we talk about hedges, the first thing is going to be, where is your target? Okay, where is your target? That's it. When we look at, if we were to look at, let's just look at Bitcoin, at the price action here recently, and we'll go through. There's going to be quite a bit that's going to be very helpful to anyone who decides to watch it. We can kind of get into some of that, but let's just start with, 1 is the target. All right. 2 is going to be, if we look at entries, along with entries is going to be your risk, clearly, right? And risk is going to be the number one thing that makes the difference between you being successful or not in the market, right? Most small traders don't do well. Why? Because they can't afford real risk with real money. So what are they? They're way out of, they're trying to win the lottery on most trades. You know that. Most traders, 99% of people lose because it's just throwaway money anyway, right? They're not walking in with, okay, you know, they're not walking in with a couple $100,000 and sitting down and saying, okay, we really need to do this. It's most traders are just throwing money away, right? They know they'll get another stash to refund an account or whatnot, but that really plays into the psychology. Here, our risk is limited. Again, we'll just review by the total risk, right? And we care, guys, just in terms of this. Like, approach it like a pro. You know, I would say would be the best thing to do, and I know you guys do. Looking at this, it's just not throwaway money. And these are big things that affect families, affect futures. So in terms of that, take a look at this on the right-hand side. We talked about needing a target, right? You can see Bitcoin in and around this first jaunt up over 100,000. You can see this nice topping formation. We got underneath, and what did we have? We had a target. We had a really nice target, right? And we had a target up through this level. If you guys remember that on the 4-hourly, yeah, it was perfect up here, right? We slammed back into that after a nice drop below. So when you're looking at price action, you're trying to decide, this is the worst place down in here, the worst place to go short, right? We're about to have that pullback. So as you're looking at, and the easiest thing to do is to start to identify just your trend lines, right? Your pattern formations, your flat tops, flat bottoms, and to ascertain the probability of revisiting the specific pattern or trend line. Again, this was a downward sloping channel. Not a huge, let's say, percentage probability of returning to that. I wouldn't say that's not something that is just known, right? Not as. Let's look at this. Let's see if we can draw out let's draw out this specific rising wedge. Rising wedge, a little bit more favorable in terms of at least hitting back at this apex, right? That was a nice hit back down through that. So as you look at your patterns, as you look at your trend lines, as you look at your flat tops, flat bottoms, those are really going to be, they're everywhere on the chart. You can't miss them. They're your supply and demand zones. They are your liquidity zones. To the extent that you're going to frame hedging around support and resistance, or flat top supports and resistance, it's probably the best way to start, okay? And I want to go through one thing. Let me change the music up just a minute here. Nothing too crazy. Let's see what we got. Now, let's get into some smaller detail here. So as we look at smaller detail, I'd encourage you guys to start to look at price action a little bit differently. Start to look at price action. And whatever you're trading, it could be Bitcoin, it could be S&P, it could be Qs, it could be whatever you're trading. I want you to start looking and seeing how fair is the price action to the traders. Okay, as you look at price action, how fair is the price action to the traders? Meaning to the traders who are going along when it's going down, how fair is the asset being? If it's going up, how fair, and people are shorting as it's going up, how fair is it being to the traders as it's going up? Now, one of the measures of that I'm going to encourage you to look at is, I want you to find consistently, as you see up and down price action, I want you to start identifying preceding peaks right here. Boom. Okay, preceding peaks. And you may need to toggle on your candlesticks, etc. I want you to start to analyze as you look at things. Nice V shape. We'll cover V shapes. We'll cover that later, okay? But as you start to look at things, okay, in this zone, let's say that a trader started to, and you got to walk through this, what's going to be important are your preceding peaks. So shorts here paid a little bit, right? We didn't have enough departure, but it paid a little bit. And what I'm concerned with here is as I stair step through preceding peaks up and over, assuming that traders started to short, okay? What's my recovery rate to my preceding peak? I know what happened here. Bam. Shorts got paid. True? Yes. Up and over the pattern, shorts got paid. What happened here? Shorts who initiated over a preceding pivot, they got paid. True? Yes. This little bit of a fine tooth, and this is where you start to evaluate, okay, how fair is whatever asset you're trading? To just shorts and longs in general. What rules are constructed around the approach that the asset is giving you, or the possibilities that the asset is giving you? As we look at, let me find just some good music. Here we go. Now, you'll start to see circumstances like this where what? Well, okay. Let's assume traders initiated shorts up and over the preceding pivot here. What starts to come into the picture? Preceding pivot here, right? So now we're starting to get a play on a preceding, right? You see, now we're jumping from this type of stair step, boom, bam, with a nice surprise, okay? A nice surprise in that traders who entered short at this preceding pivot here, what? They're left holding the bag for this, okay? They're holding the bag for this short. So, is it required? No. It's just the way that the asset, it's the way that Bitcoin is responding. It's the way that Bitcoin is treating the traders. So now we know, not only on a prior pivot do we need to formulate that into our equation, but hey, take a look left. Look left, okay? Big time important. Very, very, very important. So we can do that all the way up, and we can say, okay, so if you looked left and you gave it some time and you entered short up and over this level, right, preceding pivot, she was pretty fair, right? She paid. She did, right? So, and we can march up and continue to do that just to evaluate, how did the shorts, how did the longs pay? Right? If we're going to mark a pivot here, like is on a lower time frame, that's a pattern. This is, and this is where you have to start appreciating your pattern recognition. Inverse head and shoulders down here, right? You've got the left shoulder, you've got the head, you've got the right shoulder, and bam, we did get that momentum with what? With a nice return to the neckline. Right? If we just kind of extend this neckline all the way across, you got it. There we go. So we got the left shoulder, the head, the right shoulder, and boom, we got that acceleration that the bulls were looking for. We also did get a nice fair, I'd say some fair behavior from the asset, from Bitcoin, to pay the shorts that were overhead, right? So that's a good thing. But as we stair step up and stair step down, if you'll start to look at price like this, what does this mean? Okay, we say, well, these are impulse waves. These are, yeah, okay. These are impulse waves, meaning stay away from the shorts here, right? Don't let it play with your impulse. Stay away from the longs here, right? It'll give you the impulse. Oh, we're going short, jump in. No, right? Even this to an extent, but that's a little bit of a bear flag here that we would say. But these small moves here, bam, 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 bam. Okay, so they're impulse waves, but what happens when? What happens when we are, let's see if we can get, let's see if I got this. When we're doing this, what's going on, guys? What's going on? What does this mean? Everybody's going to look at that and just say, well, that's just a continuation, lower lows and lower highs. Okay, which means what to us? It just means it's going down great. So do you want to be short? Well, let's look at what I want to know is, how is the asset treating the traders? I want to identify, and I want to put this in some sort of a framework that I can understand, that if the trader went long below the preceding pivot, did it pay? Yes. And what happened? Yeah. And the preceding support was confirmed as resistance. So this paid the bulls underneath. Right on, right on, right on. We can call this close enough here, just with me drawing, okay? Looking at this here, I want to know, how is the asset treating the traders? How is the asset treating the traders? Well, we're going to look at this. Did it pay the bulls underneath? You betcha it did. It paid the longs underneath the preceding pivot, and it got back to that pivot, right? So it paid, in this case, it paid all the longs under the preceding pivot. You see what's going on here? It's not just etching. It's not just downtrend. It is what? It's longs that are picking up preceding pivot and below getting paid. Preceding pivot and below getting paid, just about. Yeah, let's look at this. Okay, so you're starting to see, okay, so longs are flipping back around. The bulls are getting paid while we're going down. Okay, good. You can call it, people say don't catch the knife, right? Don't catch the falling knife. I'm just going to say that there's a different way for you to start looking at price action, right? A different way for you to start looking at price action to where all of these crooked angles and jig-jags and everything else are telling you a story as to whether or not an asset is being fair to the traders who are picking, let's say, who are shorting or who are longing. Okay? And you can also get into the long and the short of it, right? You're going to be on the other side of the equation. We'll get there. But for now, just start to appreciate. Go pivot to recovery. Let's just say that. I want to go from this pivot here. Okay? See that? I want to see, did we make the recovery? Boom. Yes, we did. Meaning all the longs paid. All right. I want to go from this pivot here. Right? Where's the recovery? Well, we fully recovered up and over to here. All those longs got paid. Where's the pivot? Right here. Did we get the recovery? Darn close. Yeah? You had to make a decision. You had to close your trade. They got you in the mood here to overperform relative to the pivot. It overperformed relative to the preceding pivot. And what is this typically? We're looking at some sort of a channel formation. We agree? Yeah. So, while we're dancing and carving along, it's telling you a story as to whether or not it's being fair to the traders. Is it paying the traders? Is it? Is it not? When it doesn't, what are the accompanying characteristics as to what's going on, and what do you need to be careful of? Let's go through one thing right now. Let's go through this. Well, let's go through this. When we look at something like this, be cautious. Just be cautious if you have a straight line drop. Now, be cautious what? Be cautious shorting. If you look to the left and you have just experienced a straight line drop, be cautious shorting the straight line drop. It is like a slick marble wall or floor. You can lose it very quickly, and price can just go wham. Okay? V-shaped recoveries is one of the top things that, as you look at the market, and it makes sense for a lot of reasons. We're typically looking left, right, to gauge supply and demand. We're looking left, right? Left, correct? Yes. We're looking left to see where our supplier demand zones are, right? We can say, well, we have a pivot here, remarkable pivot here. Then boom, some micro moves here. Micro moves, nothing of significance to the extent hereof. So straight line move, bam, to the downside. Be careful shorting this on the way up. Just make it a rule of everything you're doing in the market. If you have a move, boom. Be careful of what? If you have a move straight up, be careful longing. Just be careful. Now, that's different than this. Okay? If we have something like this, we are going to expect that those pivots are going to do what? Are going to create additional demand zones possible pickups, likely pickups on the downside. So as we're retracing through this level, buyers are going to expect to see some action here at those preceding pivots. Expecting to see some action here at the preceding pivot, expecting to get a little action there at that preceding pivot. Night and day different than what? Straight drop. Careful, my friends. Bam, straight to the upside, okay? So note your demand, start to look at these carvings, start to look at what price action is telling you as it spends time and formulates the pattern frameworks that it does. All right, let's take a look at a few other things. Let's see what we've got. So we've covered, the one thing is just start to look at price a little differently. If it's carving and people don't like when it carves, right? Well, that's, it's spending time. We agree? Yeah, it's spending time, right? We just went over in the very beginning. Is it a moving average that it's spending on? Is it on the 4-hourly moving average? Remember, it's required to spend time on the 4-moving average, the 4-hourly 20-moving average, which is what the baseline of the Bollinger Band. Look at price action. It's required to spend time at some point on the 20-moving average on that 4-hourly. It's just required. Look at the Bollinger Band on your 4-hourly chart. See whether or not, and to the extent it has to check in with your 20-moving average before it gets its hall pass and gets out of school for the day. Boom, and gets to move. Bam. You see this? That 20-moving average is that yellow and blue line. Okay, this is your standard deviation upside, standard deviation downside. Look at, it has to spend time on the 4-hourly time frame, 20-moving average before what? Boom. Okay? So, while we're in a mode of carving, constriction, etc., take note in terms of what's technically being accomplished as well, is the thing that I would say. What pattern is being formed, right? We saw that last night. Last couple of days as we swung up to hit our target. That was nice. It was a good target. It was a good target that we hit late night, wasn't it? Very late night. Let me see what we've got on music. So as we look at, let's for today, let's close this out because I want you, if you can start to look at things differently, challenge yourself. Go look at a chart. Everyone wants to pull out a pattern. I do it too. What's the pattern I'm going to pull out here? Well, hold on. Look what happened. Wait. I see it. Okay, you see it. You got it. Boom. That's great. I'm not as concerned as the descending triangle. And the descending triangle is what? Is it being fair to the traders? How did the pattern perform? It performed really well. Nice drop for the primary traders. Primarily oriented traders taking a short on the descending triangle. Boom. Nice trade. But how fair is it being to all the traders? Right? Why? Because I am buying underneath a descending triangle. For what reason? For a throwback, for a pullback. So is it being fair to me? It's being fair to them. Is it being fair to me, or is it being fair to me if I'm doing it on both? If I'm going to go ahead and short and I'm going to long, right? So start to look not just at patterns, but if there's a pattern, say, did it pay the people on the front side of the pattern, meaning going directionally with the pattern, and then did it pay the hedges? Open that up completely. That's probably half the equation you're not fully considering as you're just looking for patterns to trade. Yes, and it will seem as if you're being negative. It will seem as if you're being overly, like if you're just going to start trading against the market. Well, 75, 80 plus % of the time, we go back to the pattern. So if 80% of the time, we're going to call this the miracle solution here. We don't care what they call us. We want the 80% is the bottom line, right? So taking a look at, these are great. If you can get them directionally, they can be difficult. You know that. It can be difficult to enter. And there's a way to hedge this as well, just FYI. There is a way to hedge this internally within the structure to where you've still got what? Targets, right? So let's cap this off, just a little bit of a talk, and I'll know what to repeat and who to repeat it to, which will be a nice little part of today's just kind of get together. But as we talk about it, one, don't look at a chart, find your targets. Okay, don't just look at a chart. Don't just look at a pattern. I want you to start looking for, is there a pattern we should revisit? Right? Is there a pattern that's forming, right, that we want to be a part of? Or is there where are you going to head with your cash? If you're just discount buying, power to you. No problem. If you're just discount buying. If we're part of a pattern, you can look here on the left, right? Let's see. Now let's say the double-edged sword here is what? As you're finding your patterns, start to consider not just your patterns and directionally where they may be going, but where are your value opportunities? This is the 4-hourly. Where are your value opportunities in terms of an asymmetric, okay, an after the move type of return move by the market or by Bitcoin? A pullback, okay? Where is it? It's underneath. Then the question becomes, okay, if it's easy for me to pull this out, if I'm looking at let's just say, for instance, if I am looking at a completion to the downside, got it. Let's say, then you start to say, when you look at your patterns and you look at your charts, when you look at price action, how fairly is Bitcoin? Spend some time. How fairly is she treating the traders? Not just the ones who want to short, the ones who want the throwback. And you guys know she could do this very easily. She could do exactly this. In fact, she'd love to do something just like that. True? You got it. So the number of incidents that she's going to not only pay the primary, but the secondary, that asymmetric trade, the counterintuitive trade, the hedge, right? When everyone's running for cover, we're building positions and bam, it's paid. Building positions and bam, it's paid. And so as you start to assess how fairly, right? And that's just a big deal because you'll know whether or not something's worth trading. Just start to look at the price action. You'll look at the gold chart and you'll be like, good gosh, a lot of people are hedging gold. A lot of people are hedging gold. It's paying the traders, right? You'll look at Bitcoin. You'll see that a lot too. But you'll see when, where, and how she's deciding to pay the traders. And it's not all the time. So encourage yourself to do a little bit of extra work. Don't scour the world for the earth and underneath for hedge materials. Just relax. We'll get there. The end all be all, and I'll cap it off with this. End all be all issue is, what's my cost? Is it worth my money? Right? And you start to determine those issues. If you're going to be buying Bitcoin anyway, it's worth your cost. But if you're trading it at high leverage, right? What's a percentage probability of recovery? What's it going to cost me to cover? And is it just down to the 100% target? If that's the amplitude carried down here, bam, you start to look at things a little differently. You start to even say, well, that's a big pattern. I'm going to trade that a lot differently than I would a micro pattern. Yeah, you're going to start to make some decisions which could turn you into a much more high frequency level trader where you want a quick hit and you want in and out and you want to stack orders tight. This is going to be loose, guys. This is going to be, just a real old walk in the park. Like this is going to be real lazy compared to some of the moves that you're going to want on the smaller time frames when you start to look at aggressive price action, recoveries, quick moves, quick recoveries, and condensed cash. That's the idea and the principle behind kind of where I think you'll head in terms of your analysis on hedging. Till then, guys, this is London. I appreciate your time. We'll continue to stream, and I'll continue to better the dialogue here. and we'll continue just to endeavor to do that, to make sure that we are feeding the community as it has fed us, and been a part of my growth and distribution here on YouTube and in the markets overall. I hope you guys are doing great. I hope you have a great weekend, and we'll probably chime back in. I will probably chime back in tomorrow. Take care, guys. This is London with Market Hedge.